Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this late Friday morning, almost noontime actually, on November 10th. I am fighting a little bit of a head cold I got from my daughter, so hopefully this comes out okay. So when it comes to the market, my thoughts are really pretty simple. I am encouraged. I am truthfully optimistic, just given the setup that I'd been talking about the prior few weeks, and then the thrust higher last week. And we've seen a lot of leaders or potential leaders, especially on the growth side of things, kind of thrust higher either on earnings or just with the market and really hold firm. There's been no selling at all. In fact, a lot of these stocks, I'm not saying they're, blasting off, but there's been no selling and they've actually been creeping higher here, even on days when the market hasn't been so good. Now, with that said, I'm not really yet bullish, and the reason is simple. Our indicators aren't bullish, okay? The broad market is weak, and I'll show you that, where you're looking at small caps, mid caps, new lows. There's very few stocks hitting new highs still. Not that I need to see that figure be, 300 a day before I, floor the accelerator, but, you'd like to see more than 30 or 35 on the NASDAQ, some of which are just, garbage, super, penny stocks basically, or low price stocks. And the intermediate term trend really, again, for the NASDAQ is the strongest index. But when you're looking at unweighted indexes, like the NASDAQ 100 unweighted or the S&P 500 unweighted, or if you're looking at small caps, mid caps, they haven't, really been kicking into gear. So to me, it's kind of just, I don't think there's a rush right here. It could turn into it. I don't think the market's doing anything wrong. It's just like I said, I'm encouraged, I'm optimistic, but simply put, I just need to see more. I don't need to see 200 stocks hit new highs, but some of these things that gapped on earnings and are holding firm, you'd like to see them follow through on the upside, like to see the new high list expand, so on and so forth. In Cabot Growth Investors Model Portfolio, we've just nibbled the last couple of weeks. We're still almost a little under 2/3 in cash. With that said, we run a concentrated ship. I'm not sure if I said this last week. Our normal full, we call it a full position, but our normal full position would be, say, about 10% of the account. So, if things really kick into gear here, I'll go buy 3-4 stocks right quick, So we can move pretty quickly. I just think right now it's a matter of like, hey, is small caps, mid caps, broad market going to infect the rest of the market? Is it just going to be kind of a year-end divergence? Is it going to be something where we roll over? What happens with interest rates, so on and so forth? Right now, there's been a nice improvement of the evidence. I just wouldn't say from an intermediate term perspective, there's been enough to floor the accelerator, probably enough to throw some lines, a couple of lines in the water, nibble on a few things, but not enough to just be like, okay, yeah, there's a, very, very good chance we're headed higher. We're just not quite there yet. Okay. Let me show you what I'm talking about here. As usual, I'm using MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So we talked about the NASDAQ. This is a chart of the NASDAQ. 3 waves down, shakeout below the 200-day line. So if this was all you're looking at, and to be fair, for me, it's most of what I look at, not most, but, it's very powerful. Gap, it had some real accumulation last week, and no real ability to pull back here. There is some resistance here, but importantly to me, if you look at this 25-day moving average, it's kind of trending up, or starting to turn up anyway. So that's a positive thing. Okay, the S&P 500 really isn't that far behind. It's a little bit behind. Again, the 25-day line is turning up. Okay, on the intermediate term basis, though, we do look at the rest of the market. Okay, which, Mike, why do you care what the rest of the market does? Well, as we've seen the last couple of years, when you do get a weak broad market, you can have rallies, you can have bumps, but the market works best when things are in gear for the most part. So this is the New York Composite, just kind of resistance at the 50-day line. The 25-day line is trending up, so there's some judgment involved here, but to me, this is basically kind of a neutral intermediate term trend. And then when you dig into the, again, small mid caps, which is, a lot of the market here, they had a nice thrust here. This is the MDY, but you can see it gave back. I didn't do the math here, but just call it halfway. Okay, now that's okay. Halfway is okay. Like I said, I'm not saying the market is doing anything wrong here. That's why I'm kind of optimistic and, encouraged, I guess would be the word. But it's just one of these things where, yeah, you'd like to see this, start to push higher along with the rest of the market, not just wild rotation, and get this 25-day line to turn up. The IWM is obviously even weaker. Not obviously, but it is. It's given up, it looks like, more than half the gain, okay? And just, it's been the weakest all year. It hit a new bear market low just a couple weeks ago. But again, I'm not saying IWM has to lead the way higher or anything like that. It's kind of like when I talk about financial stocks. It's not like we need the banks to be the best thing out there. We just don't want to see them implode, okay? So it's like, if they do okay, if IWM small caps do okay, that would be good. Beyond that, though, it's the NASDAQ looks good, but beyond that, you're still looking at, like, this is the ARK fund. Again, definitely improvement. I do like the setup, the pessimism, the oversold indicators, the seasonality, stuff like that. But at this point, it's just kind of like we've had a few good days, and now it's sort of just done nothing wrong, but you just kind of want to see a little bit more, okay? The IPO fund, granted, these are a little bit more, I guess I would say glamour than growth, but, the IPO fund from Renaissance, symbol IPO, same sort of thing, nice pop, but just kind of sitting here. So good that it hasn't given up the gains, but you'd like to see some follow-on effort. Of course, small cap growth, not totally surprisingly, this is IWO, doesn't look so hot. And if you look at like the IBD, this is the IBD 50 index. I think you can only get this on Investors Business Daily Products. That kind of makes sense, but I'm not so sure. But this is only updated nightly, after the close. So this is from yesterday. So it's probably up here. The market's up as I record this around noontime. But either way, you can just see it's, it had the 3 waves down. It has rallied pretty nicely, but it's not, you wouldn't look at that chart and just not knowing what it is and say, oh yeah, that's clearly a new uptrend, So I just think there's more work to do. That's all I'm trying to say here. The other thing too, and I have a lot of good stuff to say, but I am going to just let you know, because I do keep an eye on this stuff and run top 10. We're still seeing some of this. So this is Neurocrine Biosciences, NBIX. Was it the biggest leader in the world? No. Was biotechs looking great? No. So I'm not trying to read too much into it, but it looked really persistent advance, nice pop on earnings. Had a nice shakeout a couple weeks ago, and then, of course, drug companies have trials and stuff. But my point is it kind of tested those old highs, and just what we've seen recently in the last few months and the last couple of years, just kind of some big kind of follow-on selling. Energy stocks have been bad, and, of course, oil prices. You can always make an excuse, but this is Cord Energy. It's not the worst thing in the world, but to me, it kind of had this pullback, nice move on earnings, and then right down the chute again, okay? Does that mean it's going to fall 50%? No. But to me, intermediate term, that's not what you want to see if the market's starting to come out of a correction. Just some of this stuff, Axon Enterprises, the Taser. Yeah, we got it here. Again, it kind of rallied nicely. This big up day was earnings, good numbers and outlook. I didn't dive too heavy in the report, but it looked pretty good from what I saw. I read through the shareholder letter. And then the very next day, of course, yesterday was down, but still, it just kind of gave it all up. So we're still seeing some of that. Now, not to keep saying on the one hand, on the other hand, I got 5 hands here, but, we are starting to see, like here's Celsius, CELH, which to be fair has had a pretty good run this year despite the broad market being weak. It kind of broke out here, did have a pretty good run net, and now it's kind of consolidating. It's not the worst thing in the world, but, it tried to gap up. You can see day after day it was trying to go up, but they're kind of selling it, okay? Now, we also have AppLovin, APP, and this will probably lead off my stock list in terms of things that look pretty good. But what I'm looking to see is whether this pattern, it's very obvious, I guess what I'm trying to say, long story endless. It's very obvious right now, the selling on strength. It's been going on for 2 years for the most part, right? Except for Nvidia and some of these things. So, you get some of these things that are at new highs, still kind of extended above its 200-day line. Obviously, it's had a big run, and they sell into it, okay? And they did sell into it, okay? The question is, do they sell into it and it collapses or not? So here's Axon, right? They sold into it yesterday. Are we back here next week for the video or Thanksgiving and it's like boop, 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 and just kind of goes like smoke up a chimney here? Or, same thing with, App. Is it just sort of like a one-day reversal because the numbers were great, crushed estimates, blah, blah, blah. And now is it just something that everyone's jumping on it because it's obvious, but it's too obvious? It's almost like when everything's working and you're like, oh, I'm just going to buy the breakout. Well, eventually those breakouts stop working as they have the last couple of years. So anyway, that's kind of what I'm seeing. There's still a lot of potholes out there. There's still some big earnings misses. And when I say big, it's like every night it seems like there's a 25-30% name that you've heard of that's down 25-30% on earnings. Today was Trade Desk, I think. I don't know what it's doing during the day. Okay, it's only down 17% now. But every night or two, you're seeing one or two of these things get nailed. So it's certainly not everyone rowing in the same direction, I should say, or whatever you want to call it. So let's just see if it plays out. If this is the real McCoy, I would expect, these one-day reversals, they're going to be more like shakeouts and they're bought as opposed to, this thing gets hit and it goes down 6 straight days and then it might bounce and then it goes down, that sort of thing. I think it's going to be more of a 1 or 2 day shakeout. So let's see how that goes. Okay. Now, with all that said, what I do like, the one thing that I think you can say about this market, I was just slacking with Jacob Mintz about this half hour ago, but there's just a lot of earnings moves or just otherwise things that have gone straight up and they just haven't given up any move. Kind of like the NASDAQ or some of these indexes, okay? Now, this is a $1,000 stock, so I'm not leading with this for any reason, but this is Transdigm. It's an aerospace name. But again, it's just kind of like from the bottom, I don't even know. At this point, it's probably 10 or 11 days up in a row. I don't know how it closes today, but from the 200-day line, just up, 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 gaps up. Does it sell off today? No, it's up a little bit more. So we'll see how it goes, but we're just seeing that sort of action. Pinterest, I think I mentioned last week, it's the big volume here on the weekly chart. It's kind of hard to tell, but I'm pretty sure this was the biggest volume since back here in late 2021, so a couple of years on the weekly chart. And just on the, you can just see it really hasn't, that's a very tight, it's not just closing tight, maybe closing tight, but it's a very small range. So it's not like there's a lot of people in there selling it, then they bought it, and it's going all over the place. You can just see on the daily chart how tight that is, no give back to this point. It can't even fill this little mini gap. Never mind the big earnings gap. It gapped up a couple days later, right? DuoLinx, this was yesterday. Now this stock it moves like 9 or 10 points a day, so it's big. But I will say that net, first of all, it's one of these big IPO bases. We've talked about it a bunch. It was almost impossible to hang on to here. I mean, I guess if you bought it down at the lows, but it was just, very crazy, big, just that's a sharp pullback percentage-wise, all these things right here. But the volume on this one, I think we're tracking to the heaviest volume ever, maybe. Maybe it'll be bigger than the March blast off here. So, and it's kind of out to new all-time highs here too, so above $200. So that's certainly on the watch list. It's definitely handled with care. I wouldn't put the rent money in it, per se. I mean, but it's very powerful. And if the market runs, this type of stock that looks like, geez, I don't want to buy it because it might pull back, and then it goes up 30 points, that sort of thing. And then say, well, maybe I'll buy it up here, So other names, just they're not all like go-go stocks. This is Synopsys. Chip stocks are strong today. Again, just kind of smoke right up a chimney, just since the lows, day after day after day after day after day, new highs, new RP highs. They do have earnings in 3.5 weeks, it looks like, or 2.5 weeks, I should say. ServiceNow, I think I mentioned this last week too, just beautiful volume cluster. Started with earnings, it was kind of reversal, but again, it was up 10 days in a row, had a reversal yesterday. But again, you're kind of, you're just not just out to new highs, but you're starting to kind of put on some gains here as opposed to hitting new highs and reversing. Now, you got to take it as it comes. If we come in next week and the market pulls in and this is way down here, obviously that's going to look more like a failed breakout or whatever you want to call it. But so far, it's pretty powerful, and I do like the volume cluster down here. It's not unknown, of course. It's a mega cap, 129 billion market cap, so definitely big cap name, but certainly acts well. Wingstop, this is kind of not off the bottom, but it's built this base, tightened up in here, and again, this was earnings right here, and then you have 2 more days up, and this whole week, I think, 1, 2, 3, this whole week has been, like, look at the weekly chart on this. Yeah, look at that. Okay, there's a pattern IBD uses, it's called, short stroke, but whatever it is, it's tight, there's no give, and the longer that goes on, theoretically, the better. We'll see how it plays out, right? In terms of mega cap, because I get a lot of questions on these, Microsoft, just kind of like ServiceNow, just straight up, kind of a volume cluster down here. Adobe, ADBE, same sort of thing. I wouldn't say amazing volume, but you kind of have this, again, you kind of have these 3 waves down with similar lows. The NASDAQ, right, hit lower lows here, lower lows here. This was kind of the low up here, for instance. And so when the pressure comes off the market, the stocks that should do well are doing well, okay, so far. Housing, even though there was an interest rate wobble yesterday, but this is Pulte Homes, home builder. We mentioned Toll last week. Correction down to the 40-week line, okay, or 200-day line in this case. Shoot straight up, big gap, certainly could pull back. If this is my point, is like, if this happened 6 months ago or whatever, just sometime in the past 2 years, I'm not saying it would be back down here, but, it would kind of, you'd probably have a bad day or two in here and fill some gaps and see how it goes. But so far, it's very, very orderly. You can see there's been no selling this week. Will it change? I don't know, but I just kind of go with what I see. Fix, this is Comfort Systems, FIX. This has had a big run. It was in top 10 this week. But again, a lot of these housing names had pretty good runs, got hit here as interest rates started to, accelerate higher when they broke out on the upside. And then really earnings has turned it around. So straight up here, and again, very, very tight. And then just so I have some kind of off the bottom names that aren't necessarily what I might, but this is WW Grainger, GWW. Again, $800 stock. I know you guys love those, but again, look at this, volume cluster down here. Is it going to go to $5,000? Probably not. But like, it's a very, very good chart and just a very tight base in there. Held the 40-week line, shake out below it just like the NASDAQ and straight up. Okay, and then some off the bottom name. This is the other thing too, is I don't really play these for the most part, but I am seeing like this is Expedia, EXPE. It's been the dog's dinner here, and it's a bigger company now. It's $4 billion in revenue a quarter, so call it 15, 20 billion a year. But it got crushed and it's just spent forever bottoming out. Numbers have been good actually. But now you're starting to get some volume accumulation. And again, so far it's early, but you're just getting, one big day. Okay, then they sell strength. And then the next day after that, okay, they buy even more. It pulls back pretty sharply, but now it's poking right back up again. I'm not saying it's a great, but there's resistance here, but we're seeing more of that. Square, this thing's been awful. I mean, it's well below the 200-day line, so that's a no-go for me personally. But just noticing like you're getting some of these, they're down, but then you get an earnings gap, number one. Number two, it doesn't pull back. Number three, you actually get like a volume cluster in here. Okay, you actually have like Shift 4 in that same group, which I really like the story, but they just reported earnings, and you can kind of see on the, there was some support back here a few weeks ago, whenever that was, late September, okay, this week, and then just melted down further, and now you're getting another big support week after earnings. So you're seeing some of that. Last but not least, I'll just mention Shop. Again, to me, this is, I'm not saying it's the worst thing in the world, but it's there's overhead to deal with. It's kind of a double bottom base or whatever you want to call it, right? A W. But again, you have this big earnings gap and something that's big and liquid. Okay, so if institutions had a bunch of it and they're like, oh, the hell with this, I'm out. But so far, not only did they not sell, it's actually higher than it was on the gap. And, it's had one kind of reversal day, and so far it's holding firm. So I use these for me personally, they could be bought, their ideas. Some of them will show up in top 10. But I think even if you don't buy them, just keep an eye on some of these liquid names that like gapped. Square is a little bit different because it's way down there, but like Shopify, it's above the 200-day line, good numbers, all that sort of thing. It's obviously had a pretty good correction here. And so the longer these things can gap and actually advance and hold, the better, okay? So as you can see, I'm not saying like if two stocks break out, it's like, all right, we're putting the rest of our portfolio in these two stocks. I'm not going to go wild like that. But I do think, I'm also not going to wait. I don't think you should wait, 3 more weeks and wait for the market to go up here and everything to look perfect to buy either. So right now, I do think if you had a lot of cash, doing a little bit of buying, depends on the stock, I think is the right move. But let's just see. I think if things are going to work, you'll notice it. The market's going to go up. Stocks are going to break out. There's going to be more new highs. There's going to be big volume. It's not going to be like a hidden thing where you have to find the 1 or 2 stocks that are working. Okay, so far I like what I see. I think the individual stock story on the charts is the best thing the market has going for it right now. And I think if that broadens out and the broad market can just not fall apart here, that sort of thing, then I think, we could be in good shape. But, as always, let's wait for confirmation. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.